Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the broader market. So a day for dip buying for those bulls. We had the futures chart get to 4-hour oversold conditions, looking at SPX 500 USD. A couple people have asked why I use this ticker rather than the futures chart, because this is free live streaming data and I want to give it access for the masses. Look at the RSI. The RSI on the daily time frame, if we know that on this bounce, if we're up around 70, we know we're a bit extended. We've topped out just above 70 a few times. We dropped down. Where did the bounce from 27.79 occur? 4-hour oversold RSI, kissed it, bounced right back up, just under 70, pulled back, bounce, and at the low of the 4-hour candle, we were just getting to 4-hour oversold conditions. So looking at this futures chart can give you a bit of confidence to be playing some of these bounces, knowing that the last time that we were oversold was at the complete all-out dump on Corona, and a good dip buying opportunity for the bulls, long story short. One thing I want to mention, I put out a video yesterday about the weakest sectors. The weakest names and the weakest sectors bounce the biggest percentage on days like today. How does that make sense? Well, you have the biggest dumps on the way down, completely flushing out the order book and clearing the way of all these orders, and then on the bounce, it's much easier for the price to move. So you have names like CCL. I mean, we dropped down over the past few days, crushed. And then from the low of the day today, we closed up 11%. So huge opportunity. ACB is the most beat up marijuana stock. Over the past few days, it's been dropping, I don't even know how much, but probably 80% in the last couple months. But from the low of today, we hit 530 and we closed at 664. So that is a significant amount, 20% plus bounce. So if you're looking for the highest risk and highest reward trades, sometimes the weakest names will have the biggest bounces. And Bitcoin, all out flush on Corona, huge 100%, 200% bounce. If you are looking to be aggressive, to play the weakest names bullish on bounces, you must use stop losses, because if you are wrong and if you are too early, you will very quickly be down 10% and bag holding. So if you're looking to be aggressive and high risk, the weakest names have some really strong bounces, but again, protect yourself. So for the S&P 500, are we in a daily downtrend? Yes, lower high and lower low. Let's go to SPY. And this lower wick on SPY is misleading. The low of the day was in the 276s. This wick goes down to 272. So if we were going to put the real low of the day, it would be somewhere right around there. So that's what the candlestick should look like with the wick stopping there. It wasn't that big of a lower wick. The close at the high of the day is very notable. The hourly chart formed a bull flag and confirmed into the end of the day. Look at that bull volume into the close. Bull volume yesterday was notable. Where do we stand? Well, yes, we're in a daily downtrend. Yes, anything under 294.24 is just a daily lower high. But by definition, as a trader, I have the saying, when you get a daily loss of an uptrend, or when you change the daily trend bullish from a downtrend with no follow through, and this scenario would be a loss of the daily uptrend with no bear follow through for now, zoom out and look for a flag. Could this be a weekly bull flag? Yes, absolutely. Am I confident that it's a weekly bull flag? Not necessarily, no. I need to see a more significant bounce. I need the bulls to create more space so that when this current bounce does top out, we have space to try and form a higher low and change the daily trend back in favor of the bulls. But you better believe that I have two scenarios played out. Number one scenario, just a daily lower high, going to continue the downtrend, weekly consolidation going to continue. It's not a weekly bull flag. Scenario two, daily downtrend confirmed, no bear follow through, weekly bull flag, bull break of 295 coming to squeeze shorts further. Both of those scenarios are absolutely possible in my opinion. I'm not going to sit here and try and predict and tell you which one's most likely because I have no idea. I'm going to take it on a day-to-day basis and position accordingly. So, congrats to the bulls. Most important resistance for me, 294.24. Hourly chart, most important support for me is 281.05. Now, if we open tomorrow and break 281.05 real quick, that's going to increase the odds that this bounce is just a short-term little bounce looking for a daily lower high, and the bears could continue to have some momentum in their favor. If we have a solid green day tomorrow to end this week, you better believe that weekly bull flag is possible. IWM, daily downtrend, anything under 132.75 is just a daily lower high. And one more note, just to talk about those names, those weak names. Yes, they had great bounces today, but you look at them like CCL, I'm going to be looking for a bearish entry on CCL because anything under 14.39 is just a daily lower high. And at this point, that is still 15% plus away. Same thing for, if I were looking at ACB on the MJ space, it just had earnings and it's a very bullish reaction to earnings. It's up at 750 now. So from the low of the day, we're up 50% from the low of the day here after hours. But anything under 960 is just a daily lower high. Jets, the airliners, have been the weakest. Solid bounce today, but anything under 1364, over 10% away, is just a daily lower high. So for those weak names, strong bounces, but a lot of proving to do. So IWM, same thing. We're just looking for a lower high compared to 132.95 initially. How much we bounce from here, again, will indicate, are we more likely to see a lower high and bearish continuation into weekly consolidation, or is the bounce significant enough to look for a higher low and a potential trend change into the end of May? QQQ, daily uptrend. So again, I will stand firm on that statement that as long as QQQ and Amazon and Apple and Microsoft are in daily uptrends, the S&P 500 bears are not going to get any follow through. That's a very clear if-then statement I am comfortable making. So for QQQ, if we break the high of today, 221.87, our daily higher low will very clearly be set at 215.99, and we'll be looking back to the top of the bounce, 228.10. We would have to see an inability to break 228.10 and then roll over and lose the daily uptrend for the S&P 500 bears to look to negate the possible weekly bear flag and see further daily downtrend. XLV didn't break our line in the sand level. 96.89 is holding. We have a tightening daily range. High of the break or high of the bounce, low, lower high, trying for the higher low. I need to see the highs of today break tomorrow for me to confidently say these daily higher lows have been set on a lot of these names. XLF, look at the volume. It's been our weakest sector, no doubt. It is a bullish engulfing candle on a ton of bull volume. This bull volume is dwarfing the bear volume on any individual day on this entire pullback from our top. But that being said, anything under 22.32 is just a daily lower high. Biotech bulls still in a daily uptrend, easily holding anything above 89.45, and we'll see if this small candle today can break bullish over 106 cents, which would give us our new daily higher low if that is the case. SMH, daily higher low is set. Tightening range here, fairly similar to XLV. They are in daily equilibriums. Higher low, certainly looking set. Most important resistance, 137.91. The most bullish thing that can happen, in my opinion, for a weekly bull flag on SPY to be the most likely scenario is if XLV and QQQ, if QQQ continues its daily uptrend by breaking to a higher high, and if XLV never loses its daily higher lows. SMH, similar to XLV, just doesn't have as much weight in the S&P 500 as far as its importance. The VIX, we knew anything under 40.30 was just a daily lower high. Well, it's looking like that lower high may be set. If the bulls are going to change this trend, we have to hold the low of $26 and then break the daily lower highs in an inverse head and shoulders pattern. And that's something we're going to be watching for as well. TLT, daily double bottom at 162 and a bull break. So again, full disclosure, I am not clear about this daily chart whatsoever, which means I am not going to be trading TLT. Very simple. If a chart is unclear to me, I'm not trading it. But anything over 162.10 is a daily higher low. And the question will be, how long can the bulls keep up this higher low and higher high pattern that we have now just begun again after the bears had control for the previous couple weeks before then. DXY. So the dollar is breaking bullish, but it's not convincing. And generally when I see an equilibrium this prolonged and this tight, I look for the break to see a significant amount of follow through. And the kind of equilibriums that I want to be trading are those most convincing breaks. Because when you have a convincing break, you have bulls piling in and you have shorts racing for the exits to cover. Because everybody's seeing the same thing. And if I'm looking at this dollar chart and I'm a bear, I'm saying, that's not a very convincing break. Maybe I'm going to give it a little bit longer to play out before I cover my short. So still patiently waiting for clarity on the dollar. We know it's still a tight range. But gold is looking good. And I added a bit to my long-term gold position at this point. I've been trading a longer-term swing position on GLD longer than I have in a very long time. And my most recent entry was April 1st. So I'm adding to that position. Why am I adding to that position? I don't like averaging down into trades that are getting away from me, but I like averaging up into winners because what does that do? Well, the only thing I'm risking is profit that I've already made. Worst case scenario, by increasing my exposure, now that the bulls are tipping their hand a little bit and saying, okay, bulls still have control. Worst thing I'm doing is going to be giving back some profit. I'm not going to lose on this trade because I will stop out before we get to that point. And I'm just playing the higher lows. And right now we're looking at the high of 1738 and then 1748 as our two short-term resistance levels as the bulls try and hit 7 or 9 year highs, whatever it is at this point. Bulls strong. Silver, also a very clear bull break, 1585 breaking. And we have to be watching now. What's the next resistance? 16 psychological. But we have to be watching this XAU XAG chart because we are at a key support. And if we break this weekly uptrend by breaking 107.90, it will be a lower high and lower low. We will be in a weekly downtrend for the first time in a long time. And that is best case scenario for silver bulls. That will tell us silver has been the better place to be over the last few weeks as opposed to gold. So key support test coming up. And if it holds, we'll have a sideways equilibrium that will likely take until early June to break. Bull miners held key support 33.37 on GDX. Held it by 5 pennies. And now we're breaking up to test the top, 35.56. If 35.56 breaks, we are then again looking back. How about that V-shaped bounce? We are then looking back at resistance from many years ago in the 36s. 36.29 would be the next level. Oil. If 24.40 support holds, the bulls keep complete control of oil daily chart. And here we are breaking to higher highs. Is this a bull flag? Sure, you can condense it down, 2-day time frame. Looks more like a bull flag to me when it's not as prolonged, but yeah, bull flag. Continuation, 29.11 is the next resistance. And after that, spike to 0 on oil or spike to negative. Oil has done a great job of recovering. Let's see what USO is doing. Because again, USO shifted its holdings to longer term contracts, where if it didn't do that, it would have bounced more significantly, but obviously they were trying to protect themselves. Most important support, 2027, and it held by 3 pennies here, so a double bottom, and now resistance, 21.91 is in play, but we haven't broken bullish yet. So a bull break on the current futures contract, but we don't have a bull break on USO yet because, again, further weight is being placed into those further out contracts. Natural gas, all bears still daily inside bar after the inventory report, and that inside bar is going to have to break bullish for a bounce to get underway. Keeping in mind, we will just be looking for a daily lower high, and bears will be patiently waiting for that daily lower high. So overall, again, very impressive bounce. 4-hour RSI, a bit of a guide on the S&P 500 futures chart. The hourly trend change for the bulls is a good sign. The strong close into the end of the day is a good sign. The bear break on the daily time frame with no significant bear follow through is a good sign. So the bulls definitely have a lot to take away from today. And again, if we close tomorrow green, I don't care if it's plus 0.2%. If we close tomorrow green, I will be watching for the potential of a weekly bull flag into the end of this month. And again, one last time to emphasize the importance, QQQ, Amazon, Microsoft, Apple, daily uptrends on top watch must be maintained for bull confidence. Have a good rest of your day. We'll see you next week.